This is a video for problem 13A on page 29 in your textbook. S. Strom, attorney at law, opened his office on October 1, and he has accounts, cash, prepaid insurance, office equipment. Library is where he actually has donated books to his firm, and so it's not a room, but it's just his books, his law books. Remember, accounts payable is a liability account where you owe people money. S. Strom Capital is the account where you keep track of all the investments by the owner. Revenue is when the business is making a sale, and expenses are when you pay for something such as rent or supplies or insurance. Insurance mainly when it's month by month. Prepaid insurance is when you're buying a policy and paying for something that lasts more than 1 month, and so you could redeem it if you decided to cancel your insurance. Okay, let's go to transaction A. It says, an A. Strom deposited $25,000 in a bank account in the name of the business. So cash is going up by $25,000, and because it's an investment, you have to go to the capital account, and capital is going from 0 to $25,000, so it's going up. So looking at your equation, the left side of the equation equals the right side of the equation. Looking at step B, bought office equipment on account from Milgore Company, $11,700. So here we're not spending any money, but we are getting office equipment, so that asset account is getting bigger. And because we're going to pay for it later, it goes into accounts payable, and before we owed nothing, now we owe $11,700, so that account is also increasing. Notice the left side of the equation equals the right side of the equation. Looking at letter C, the owner invested his personal law library, his books, which cost $4,700. It actually tells you to increase the library account. So we're going to the library account and making it get bigger for the value of the books. And because it's an investment, we go back to the capital account, and that's going to increase. So we have the same increase on both sides of the equation. Looking at letter D, we paid the office rent for the month, $1,050, and wrote a check. Anytime you write a check, your cash is going to decrease. And what we spent it for was rent, so we're going to go over to our expenses and show that as an increase to our expense and label it as rent. And label in letter E, we bought office supplies for cash, $475, wrote a check to do that. Again, we're writing a check, our cash is going down, and we're purchasing supplies, which is an expense. So we're going back to the expense ones, and remember, anytime you record an expense, it's going to be getting bigger, so it's a plus. But we are subtracting on the left side over here, and we are also subtracting this column from the right side of the equation, so we're in balance. Looking at F, we bought insurance for 2 years. $284, wrote a check to do it. So cash is going down because we're writing a check. Now we're buying insurance. We're paying money for it. If we decided to terminate that policy, we could get a refund. And so this is considered an asset. So cash is going down, prepaid insurance is going up. Notice that all the activity is on the left side of the equation, and that's fine. Sometimes it's all on the left, sometimes it's all on the right. Many times parts on the left, parts on the right. But we subtracted and added the same amount, so the net effective change would be 0, so we're still in balance. Looking at letter G, we sold legal services for cash, so our cash is increasing because we made a sale. And when you make a sale, you have to record it in the revenue account, and revenue, when you make a sale, goes up. Looking at H, we received and we paid the telephone bill, and we wrote a check. So in H, we're going to decrease our cash, and anytime you have an expense, the expense will be getting bigger. So that's a plus there, but remember anything in this last column is subtracted from the right side of the equation. And this one actually you would want to label telephone. And I'm just going to abbreviate that there. Okay, looking at letter I, we paid the salary of the part-time receptionist $1,060. So when you write a check, your cash is going down. And we are paying salaries. Salaries are an expense. So we're going to go over to our expense column again and record that. And again, this one would be identified as salaries. Okay, looking at letter J. In letter J, we received and paid the bill for utilities. So we wrote a check. So in J, our cash is going down. And it's utilities. Utility is an expense, and so the expense is going up. And you would want to label this utilities. Okay? Looking at letter K, we sold legal services for cash. Cash is going up. And our revenue account is also going up. So we plussed on both sides of the equation, so we're in balance. In L, we paid on account to Milgrer Company, a creditor, so we wrote a check, so our cash is going down. Now what we're doing is we're paying an existing bill. So we're paying down our balance that we owe. So this is going to be a minus to accounts payable. So we've subtracted on both sides of the equation. In letter M, the owner withdrew cash for personal use, $2,200, wrote a check. So cash is going down. And it's for personal use, so it's like going to the bank and drawing something out of your account. So I'm going to the capital account. I'm labeling it as a minus, but we're putting it in drawing. When we get into chapter 2, drawing will show up in its own account and won't be tucked into the capital account. Okay, if you were to take these right now and total all these columns, you should come out with these numbers. Okay? And at this point, when you now add up all your columns on the left, you should come up with $40,599. When you go to the right side and add liabilities plus capital plus revenue but minus expenses, you need to come up with that same number, which we do. And this concludes this demonstration.